Let's start off with the story. So this is a company listed in Nasdaq, and this company is a F&B company. And after they have listed, IPO price $4. Within the next 2-3 days, $4 become $15. The share price went up almost 3 times in a few days. So this company, 𝐶𝐶H Holding, and then with this hype, right, a lot of media are covering it. Whoa, this company after IPO is so red hot, and immediately after the share price hit $15, the next day just crashed down to $2 if I'm not wrong. And then the media just come up with, wow, so this company suddenly become $2. Investors are so worried about companies. Investors are selling off the company and then say this is something like a US market, and US market is always like that. This is the article, and this is a Penang company, and then within like 2 months, right, it just show US share which is high risk. By linking 𝐶𝐶H Holding and then stating that US share is high risk, this company doesn't mean that US company is a high risk company. And then he said that because the share price went like 4 to 15 within a short period of time, and right now it's 265, and in fact right now it's $1 plus. He said this is just structural liquidities that leading to this result. For me, right, all this writing, right, is a bit bullshitting, because the US market doesn't mean that the liquidity structure will lead to this kind of roller coaster result, because it doesn't happen to US market, it happened to Hong Kong market, it happened to Singapore market. It's really largely depends on what is the company about. It's not about the market activity or market volatility. The share price movement in the end of the day is linked back to company fundamentals. So he just said that this US market is because there's emotions, there's capital driven behind, and then what he shared right now is more interesting. When the company is a Southeast Asia company, Penang brand, it's a franchise system, the share price naturally will go up high. When the people are not optimistic, there's no company results that keep brewing the company share price, the capital would retreat. It's super bullshit, because it's just less than a month. How can you expect there's more like media coverage? And less than a month, I believe most of us right here are really a seasoned investor, but I would like to raise this again, because this happened again and again and again. We might know this company, 𝐶𝐭 Holding, and we might also think that this is a small company that we don't want to put our money into. But who knows, later down the road, there's another companies, that stories that draw you into it. What I want to point out is, when we read articles, right, look for articles that give us substance, look for articles that tell facts, not just emotion, not just stories. I hope this by sharing these two articles. Yeah, I know this one is Chinese, this one is English, but just share with you some perspective. So let's say it's an IPO price of $4, right? $4, their market cap is at close to 80 million US dollar. I repeat that, 80 million. And if you look at their revenue, right, 9 billion, net profit 1 billion, 80 billion market cap at IPO price $4. And remember, the share price went up 3 times, means the PE from 80 become 240 times. And you talk about price to sales, right? This is a F&B company, price to sales, IPO is at close to 10 times, and then the highest price, $15, right, is 40 times.
40 times.
Price to sales company, F&B chain store. This is not a tech company. And then he will say that as this scale, such earning and structure would struggle to justify a public listing in Malaysia. There's many reasons why they list out there. And then they only list share liquidity of close to 8%, i.e. the liquidity is low. So this is one of the biggest sign that we should pick up. The share liquidity is very, very low. It's lower than so-called the 25% public float. This is the first pointer. Liquidity very low. Means there's not much share outside for trading. And where there's not much share outside for trading, right, it is bound to have squeeze, in the sense that when you buy, right, because there's very little share, you have to buy higher, higher, higher. That's why the share price can push up like crazily. And it also means that when you're selling, right, there's no people buying, the share price just crash straight away. Yeah, so these are the numbers they share. And also Alphabet is just 10 times. How can this F&B 10 times? The first thing is liquidity is really crazily low. Second, their valuation is crazily high. It's not about whether there's investors could justify the crazily high share price. It's like couldn't sustain the PSPE at all. And eventually it just crashed. So liquidity, valuation, this is just another nightmare. So if you can appreciate that, although this is a Malaysia company listed in US, this is bound to be a company whereby there's a buy and dump situations appear. So this is 𝐶𝐶H Holding. So it's like boom boom. There's this company called Mo Xian. 2021, when everyone is talking about tech, right? This company, same thing, not profit making, close to $1, right? Went up $30 within a short few months. 1 to 30, very low volume. And this is also a Malaysian company listed in US. And then you think that it only happened in US market, right? This is another Singapore listed company. From less than a few cents become $2 within a few months. And right now it's not even 1 cent. So same reason, low liquidity, crazy valuation. I'm not even talking about a company track record. I just talk about crazy valuation. And of course, this one is happened to be pump and dump company in Singapore. And then not forgetting this company called GameStop, legendary roaring kitty company. From $1 go as high as 500, so that you beware, and then you are also aware that all these company, regardless is it IPO company or regardless is it companies that just went hard in a short amount of time, when valuations doesn't justify, so they have to continue to close more and more deals lah. But at least they have a track record of growing price to sales, not like just IPO. They IPO for, I think it's close to 4 or 5 years before COVID, and then their sales have proved to be so-called 100%, 200% in terms of like their revenue, just like our Nvidia. And then right now 120 times, like they double, right, is still 60. They continue double, right, is 30. They double one more time, right, is 15. So they need to grow their price, grow their sales, right, at least 8 times before the price to sales come back to 15. Their price to sales is 120, right? They need to grow their sales at least 8 times before the EPS go down to in the teens. 8 times. Yes, the share price went up. You might have sold it early. You might not make as much. But you know that this valuations is not sustainable. It's bound to have some adjustment. You might make from 120 times or 100 times to 200 times. PS means another one-time growth, right? But I would rather choose a more sustainable one. And then would I want to be in this like irrational so-called share price or irrational behavior? Then you ask yourself, it's like you playing musical chair. You wouldn't know when would you be the last one, and then you wouldn't know when the last chair throw off, like you don't have chair to sit. Is the company doing well? Yeah, the company is growing well, but the liquidity and valuation, every time is these two things. I don't care whether is this a good company, growing company, whatever company. When these two things come together, right, the share price volatility will be there. So that's why company fundamentals is very, very important. What is their growth strategies, how they run their business, what is their cash flow, and what is the plan to maintain or even let the investor have a clarity on how are they going to generate returns per se. Alright, thanks for watching to the end. Before I go, do remember to click subscribe, comment your thoughts, and share with someone who need a little bit of investing motivation today. See ya!